Let's establish what we're dealing with here. Kaspa isn't just another proof-of-work chain claiming to be better than Bitcoin. It operates on BlockDAG technology, directed acyclic graph, which honestly, fundamentally restructures how blockchain consensus works. Traditional blockchains process one block at a time, creating a linear chain. It's simple, secure, but, slow. Kaspa's BlockDAG allows multiple blocks to be confirmed simultaneously, running parallel to each other while maintaining the same security guarantees as traditional proof-of-work. The result? 10 blocks per second. Instant transaction finality. Zero compromise on decentralization. Crypto analyst Buy the Fear, who's been tracking Kaspa since the early stages, stated flat out, Kaspa is the fastest proof-of-work network globally, 10 blocks per second, high security, no trade-offs, and fully decentralized. That's not marketing fluff. That's verifiable, measurable performance that puts every legacy proof-of-work chain to shame. Bitcoin maximalists love to preach about security and decentralization, but they conveniently ignore that Bitcoin's architecture makes it unusable for everyday transactions without Layer 2 band-aids. Kaspa solved this at the base layer. It's what Bitcoin should have evolved into but couldn't, because honestly, changing Bitcoin's core protocol is like trying to renovate a building while people are living in it. So, if Kaspa represents the technical evolution of proof-of-work, faster, more efficient, equally secure, why are the gatekeepers of crypto liquidity pretending it doesn't exist? The fair launch problem. Here's where the plot thickens, and why I genuinely believe there's more to this story than meets the eye. Kaspa had no ICO, no premine, no venture capital allocation, no insider bags, zero private sale rounds. Every single KAS token in circulation was mined fairly from the Genesis block, exactly like Bitcoin in its early days. For believers in true decentralization, this is the holy grail. For the modern crypto-industrial complex, it's a nightmare. Think about how the game actually works now. Projects raise millions from venture firms in private rounds. Those VCs get tokens at pennies. They then leverage their connections to secure exchange listings, knowing they'll dump on retail at 50 to 100 times their entry. It's a coordinated extraction mechanism dressed up as democratizing finance. Kaspa breaks that model completely. There are no venture capitalists who bought at insider prices demanding their exchange listing payday. There's no foundation sitting on a massive premine ready to partner with exchanges through listing fees and token allocations. Kaspa is genuinely grassroots, and that might be precisely why it's being ignored. The fear suggests this could be deliberate, that Kaspa's community understands the value of organic growth over manufactured hype. It mirrors Bitcoin's early development, mined quietly, accumulated steadily by true believers, then recognized globally only after it became impossible to ignore. Kaspa appears to be following that exact playbook, except now it's happening in an era where people expect instant Binance listings and TikTok virality. What exchanges actually want? Let's talk plainly about what Binance and Coinbase actually prioritize when choosing listings, because technical merit is pretty far down that list. They want liquidity, massive trading volume that generates fee revenue immediately. They want institutional backing, recognizable names that legitimize the listing and attract capital. They want regulatory clarity, projects that won't get them sued or investigated. And frankly, they want tokens where insiders can coordinate supply management to prevent catastrophic dumps. Hold up. Before we continue dissecting why Kaspa's being blacklisted, do me a solid. If this investigation is opening your eyes to how the listing game really works, hit that like button right now. It tells YouTube to push this to more people who need to see it. And if you're not already subscribed to TJ Crypto World, fix that immediately and turn on notifications, because we're the only channel connecting these dots, while others just repeat press releases. Alright, let's keep going. The accumulation phase. Kaspa checks none of the typical boxes exchanges love, which creates a fascinating dynamic. Limited to smaller platforms, KS remains accessible primarily to people actively seeking it out. That's not weakness. That's a filter. Only informed investors are accumulating right now, while retail remains completely unaware. Buy the Fear describes Kaspa as a discovered resource in its accumulation phase, something valuable that early adopters are quietly securing before mainstream awareness hits. This isn't speculation, it's observable on-chain behavior. Mining continues steadily, exchange withdrawal patterns show long-term holding, and ecosystem development accelerates without corresponding price explosions. Meanwhile, Kaspa's building real infrastructure. Kasplex Layer 2 already launched, bringing smart contract capability to the fastest proof-of-work chain in existence. Layer 1 smart contracts are in active development, The ecosystem is expanding functionally, not just speculatively. This is substance over narrative, which explains why you haven't seen Kaspa shilled by influencers with 37 conflicts of interest. Compare this to how early Solana or Avalanche developed. Both spent significant time building technical infrastructure before major exchange recognition triggered explosive price discovery. Once the ecosystem matured enough that ignoring it became impossible, listings followed, and prices adjusted violently upward to reflect actual utility rather than hype cycle. So, here's my personal thesis on what's really happening, and honestly, why I believe the silence from major exchanges might actually be strategic rather than negligent. Kaspa represents an existential question for the proof-of-work narrative. If a proof-of-work chain can be this fast, this scalable, and this secure without trade-offs, well, what's Bitcoin's technical moat? The answer is network effects and brand recognition, not technical superiority. That's, pretty uncomfortable for maximalists and for exchanges whose businesses are built on Bitcoin's dominance. Additionally, Kaspa's fair launch model threatens the entire venture capital listing pipeline that's become standard. If projects can succeed without VC backing, without insider allocations, without the usual extraction mechanisms, that really undermines a very profitable system. Maybe Kaspa isn't being listed because allowing it onto major platforms would validate an alternative model that powerful players just don't want validated. Or, maybe, and this is equally plausible, exchanges are simply waiting for sufficient liquidity and regulatory clarity before listing. Not everything is a conspiracy. Sometimes the boring answer is correct. But either way, the outcome is the same. Kaspa continues building while remaining undervalued relative to its technical capabilities. For patient investors, that's opportunity. For traders expecting quick flips, it's frustration. Here's the reality check. Kaspa's fundamentals are objectively strong. BlockDAG architecture works. The fair launch model is genuine. Development continues aggressively. What's missing isn't technical merit, it's market access and mainstream visibility. Whether that visibility comes through major exchange listings, institutional recognition, or just, organic growth reaching critical mass, the direction seems clear. Proof of work isn't dead, it just needed better architecture. Kaspa represents that evolution, and eventually the market will price that in. If you're the type of investor who prefers accumulating quality assets before Coinbase sends out listing announcements, Kaspa deserves some serious research. But hey, if you prefer waiting until CNBC covers it, that's totally valid too. Just understand you'll be buying at different prices. Before you leave, smash that like button if this breakdown gave you a perspective you won't find anywhere else. Subscribe to TJ Crypto World because we dig deeper than surface-level price predictions. We investigate why markets move the way they do. And hit notifications so you catch my next deep dive the moment it drops. And while you're here, check out my recent video on the proof-of-work renaissance and why 2025 might be the year these chains finally get their recognition. Link is right above and in the description below. Thanks for rolling with me on this investigation. Fam, stay curious, stay skeptical, and I'll catch you in the next one. This is TJ from TJ Crypto World, signing off. Peace.